So real estate is forgiving, right? So even though I quote unquote overpaid or paid market value or whatever, I feel like I overpaid. You're not supposed to buy a business asset at market value or over market value. No business can operate like that. But real estate is forgiving. All I had to do was just hold it to rent it, and it would make money. I could sell it at any time. Anytime. I could have sold it right then, got my money back, or sold it in 10 years later and got my money back plus some.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Andrew Postell is a single-family real estate investor. He resides in Dallas, Texas, and is ranked as one of the top lenders in the U.S. Andrew, welcome to the show.
Thanks for having me.
Hey, Andrew, we got to talk here before we kicked off the show about a few things that you are involved in. I ask the same questions to everybody who comes on the show, which is where did you start? Where are you now? And how did you get there? With the caveat, can you do it quickly?
Sure. I started on $30,000 homes in Florida. I am at $200,000 rental homes in Texas now. And the journey took me about 20 years to get here. That's the summation of it.
I think, I don't know how many episodes I've recorded, 360 at this point, maybe 370. And that has to be the most succinct answer I have ever received. I like that. Sounds like we're going to get right down to business. Talk to us about that journey. What are some things that you have learned? What are some things you've done right, done wrong? What would you do differently? All of that.
Yeah. So when I got started, there was no podcasts. The internet was barely a thing. So I went to the library. I knew I wanted to get into real estate. I went to the library to look at a book, and it was already 8 years old. It was already outdated. I just had to do it.
Right.
I took everything that I had, put it into one property. I do not recommend for most people to do that, but I started very small. The property I bought was a $7,000 home.
Why?
It needed $23,000 to renovate it, and afterwards it was worth $30,000. So if I'm doing it by the book, that's not anything you ever do, but I would do it all over again because that's how I learned. After that one, I did another 30,000 and another. So I just kept doing it, and it took me a while in the beginning to get it. Now, though, the lesson here, I can network with other real estate investors all around the world, really, learn about what they're doing, and be smarter and better at it. So it's a little bit more accessible now than what it used to be. And that's what I always preach. Talk to other real estate investors so you can learn from them. You're still going to make some mistakes, but limit them as best you can.
Right. Yeah, absolutely. What gave you the courage to continue buying $30,000 homes and not making any spread on it? I guess were you holding those for long-term rentals?
Yeah, holding them for a long-term rental. So real estate is forgiving, right? So even though I quote unquote overpaid or paid market value or whatever, I feel like I overpaid. You're not supposed to buy a business asset at market value or over market value. No business can operate like that. But real estate is forgiving. All I had to do was just hold it to rent it, and it would make money. I could sell it at any time. Anytime. I could have sold it right then, got my money back, or sold it in 10 years later and got my money back plus some. So I knew that even though I didn't make it correct the first few times, I would get it. And now I'm doing very fortunate where I'm at.
That's great. That is great. Talk to us about how you were able to finance those. Because, most people starting out may have, the 20, they might have 30 grand in the bank, but that might be all they have. If that's just, when people are starting in real estate, they're not typically getting into it flush with cash, or they wouldn't be going into it. So yeah, how did you finance that?
So the very, very first property I ever purchased was my own primary home. My primary home, I rented out the rooms. We call it sometimes house hacking. Sure. I rented out my room. So I bought my primary home with a 0 down payment program. So as a first-time home buyer, that one was a $50,000 home. Woo, 50. But over time, I moved away. I rented it. I sold it for 80. So I got about 30 grand out of it. I used that 30 grand to buy my first renovation project. my first rehab project.
Sure.
So yeah, I did not use financing. And here's, if you're doing $30,000 homes, financing is very hard to get at that level.
Right.
It might even be impossible depending on your market and what you got going on. So the second home I did was another $30,000 home. I had to go to a private person to get it. But I had experience under me when I went to that person. And that's why they gave me money to do it. So that's how I got started. It was very hard. And that's how I got financing in the beginning. First time home buyer grant gave me my first primary home. Second home, all cash. Third home, private financing.
And I guess you had to sell your first primary just so that you could scrape together enough to go out and buy another rental property. Where did you live at that point in time?
So at this point in time, I am now in New York.
Okay.
So my properties are in Florida. I am in New York. When you live in New York City, 30,000, a parking space is not 30,000. They sell parking spaces up there for like 150.
Right.
So investing in New York City at that income level that I had at the time there was no option. There was no choice. I had to do it out of state. Now, luckily, I had a good network in Florida that I could trust. So even though some markets might have been more profitable for me, I had a trustworthy network in Florida that I relied on. Sometimes I never saw my properties, but my network kept me in a good place and kept my renters in a good place. And without them, I could not have made it.
Yeah, that's talk to us about that network, maybe on the timing of when to build it, how you went about vetting that network. It's a rare thing where you can get that many people, because you would have needed a broker, you would have needed somebody looking at properties, you would have needed a rehab person, you need a property manager. There's a lot of moving pieces there to manage from New York City.
Yeah, and you might be surprised about how many people you already know in your network. You may have never asked who an insurance person is, or if a real estate agent or a loan officer. You might already have these people in your network, but we haven't asked yet. Now, my primary home at the time, that $50,000 home, that was a Florida home. I did live in Florida for a short time. So the network that I had was already there from me living in that state.
Right.
And my career took me to New York. So just through natural attrition, I already had that network there.
Gotcha. So at this point, you're flipping houses, you're making okay money at it, your career takes you to New York. I guess that brings us to today. Are you still working in your career, or have you transitioned out of that and doing solely real estate?
So I am a loan officer. I did not start this way when I was in real estate. When I was in real estate, I did commercial insurance, but it was fine. It was a good career. I got into lending on accident.
Okay, walk us through that. I want to hear this story.
Okay, well, I worked for a commercial insurance carrier in New York, and they sold their division to a competitor, and I was part of that. And the commercial insurance company I worked for at the time, they were privately held. They gave a bunch of money to charity. I really enjoyed working for them. And the place they sold us to was publicly traded. They gave nothing back. It was not a fit for me. So I just went out to look for jobs, and a little mortgage company asked me to come on board. I had no mortgage experience, and they were like, but you have 10 years of sales experience. It was a little mortgage company. I was like their 120th employee. And so they put me on the fast track in the executive part of their company because they were so small. But it was a really good learning experience for me to work for a small company to help it grow. And then I went and opened branches around the country, which brought me to Texas. So for that mortgage company, we opened a branch here in Dallas. I was only supposed to be here for 1 year. I've been here for 9. And that's why I'm here now.
I can relate to that story. You're like, oh, it'll just be quick. We'll get some things organized, and then we'll figure out where we're actually going to land.
Mm-hmm.
And 9 years later, you're like, oh wait, I'm still here.
Yep.
We had talked off air about the necessity of finding a lender you could work with and the problems that you were having on the investment side. Talk to us about that side of the journey.
Sure. So as a single family person who didn't have very much means, I'm buying $30,000 homes.
Right.
For a lender, that is a losing proposition. They lose money lending money for mortgages at that level. They usually like to have like $100,000 loan amount minimum, because that's when they are profitable.
Right.
So it was very rough going in the beginning. Even the first lending company that I worked for was like, no, we don't even do investment property. They didn't write them at all. They only did primary homes. Only through time, as a loan officer, eventually I worked for a mortgage broker who had several different lenders at his disposal, and that's where the light turned on. Now I could see what all the lenders did, and there were some out there who were friendly to us. They were hard to find. They didn't advertise. They didn't have a fancy, sexy commercial on television. You had to have a connection. You had to have somebody you already knew. I knew the broker, and now, as a real estate investor, my real estate investing friends knew me. That helped out. Me being a real estate investor taught me how to become a better investor.
So talk to us then maybe about, the lending, maybe the criteria and how, was this lender still lending on 30, or was you being a mortgage broker, were they lending on the $30,000 homes, or were you still in that 100,000 plus price range?
Yeah. So I'm gonna give you 4 questions.
Okay.
Here's the 4 questions I tell everybody to ask your lender. So this is the test. If I'm in the 1 to 4 unit real estate investing world, I want to ask these 4 questions. Question number 1: how long do you need me to be on title? And the answer should be 1 day or less. I'll take less. Less is a better answer. There should be no seasoning. None. There are plenty of lenders out there that have no seasoning requirements. Question number 2.
Before you go any further,
Go ahead.
I feel like I should grasp everything you just told me. Why is that important?
Right. So one of the biggest areas that we have in the single family world where we're renovating our house is that lenders want us to be on title for 6 months or 12 months. I want to be able to refinance to take my money back out of that property right away so I can implement it on another one. The quicker I can refinance, the quicker I can find another property. I cannot wait on the lender to require me to be on title.
Right. You're saying, so this would be in an all cash purchase situation.
Not in all cash. Even if I'm using hard money or another acquisition loan, there are some lenders that will require me to wait.
Right. No, I've got you. How long? So basically, you're asking how long is the cash out refi period? Like okay. Yes, I understand that. Got it.
Okay. Yep. I need to be able to refinance right away. No waiting. Question 2: when will you use my after repair value? And now it sounds crazy, but not every lender will use the after the fully rehabbed value right away.
Right.
Some of them will want you to wait. Question 3: when will you start to use rental income to help me qualify? Again, some places they want it to be on your tax returns or this and that. They need you to have experience. No, there are plenty of them that do not require any of that. And question number 4: what is your loan minimum? I need it to be 0. I can't find a great property and it's too small for you. Listen, I appreciate you as a bank, okay? You're saying you want to go after the big dogs, that's fine, go for it. That's why we talk about using smaller local lenders that are willing to help somebody like us. There are plenty of great properties that are $60,000 that do just fine. And there are plenty of lenders that can work with you. You just got to find them. Those are the 4 questions I tell everybody to ask.
I think those are great 4 questions. And I can personally relate to the pain of question number 4. Maybe in a lot of markets, people are going to go, gosh, that's insanity. Who can buy a house for you can't buy a dog house for 60 grand. I wouldn't think in some markets. But here in the Memphis market, where I'm based out of, and I'm rewinding the tape here 6-7 years. $30,000 to $50,000 purchases you could do all day long. Maybe not anymore. But you could then. And it was a real challenge. Man, it was a challenge. Actually, I never did find a lender. Ended up just scraping pennies and nickels together from everybody and their brother just to keep moving forward. It's like, well, we can't find loans on these houses, but you're telling us that it is possible, and there are actually people lending in that space.
There are, yes.
That's great. That is fantastic. So this helped you then, as a lender, propel your own investment business.
Yeah. I got to see everybody else's deals that came to me. How'd you do that? Tell me more about this. Where'd you get that property from? How did you find that? Who's your contractor? Yeah, man. Working in the industry, you learn real quick. And now you can share it with others. Man, it really helped.
Right. Talk to us about why you're no longer buying. And of course, you're in Fort Worth, which is, probably finding a $30,000 house today is probably fairly tough to do as well, I would imagine. But talk to us about why you're no longer buying those lower end properties and now why you're buying $200,000 plus properties.
Yeah. So in our market, 250 and under, the lower the better. You can find in some parts of Texas, you can find very small, inexpensive homes that rent just fine. In that market, in that space, your maintenance cost is much higher. What I mean is replacing a door on a $50,000 home costs the same as replacing a door on a $200,000 home. So proportionately, my maintenance expense is lower on a higher valued home.
Sure.
My renters are also a little bit different at $200,000. The thing that I'm very fortunate about last year, none of my renters missed a single payment.
Wow.
Because to afford a $200,000 home here in Texas, you have to have a career.
Right.
Not an entry-level job. Entry-level jobs are the ones that always get hurt the most when the economy goes south. It's always the same class of people. It's frustrating. But for me, being at the $200,000 home range, very fortunate this past year. Very fortunate.
That's awesome. Have you always stayed just on true to core single family investing, or have other assets caught your eye along the way?
Well, I mean, they have, but not in an ancillary way. Okay, so I'll explain. Like in New York City, it's hard to invest in real estate up there, right? So during that time, hey, I put money into my 401k. I put some money into some stock market. I'll still make the case I can buy a stock for $5. I can't buy a house for $5, So there's been some times where I have been unsure about the real estate market, and I've still put it in somewhere else. I'm a saver by nature. I think that's one of the things that helps me in real estate. But predominantly, those ancillary things are just a small percentage of what I do. Real estate takes up the vast majority.
Right. That's fantastic. I love that. Were there any mistakes, or were there some surprises along the way that you learned that you want to help our listeners avoid?
Well, I've never read a book, ever. I've never partnered with anybody, ever. This is just me. Okay, so any mistake I've made, it's on me.
Right.
All the profits that I make are also mine too. So the mistake, okay, I'll take the best mistake I ever made. I bought a house in Florida in 2008. 2008. At the time, the market was already crashing, and I thought, man, we can't go much lower than this, right? So I bought a townhouse for $131,000. They were just selling it for $175,000. What a deal! Well, it crashed all the way to $80,000. It was worth $80,000.
Wow.
This is my biggest mistake. How much money did I lose on that property?
Depends on how long you held it.
I still own it. I still have it.
Right.
This is real estate. If you're a buy and hold investor, even your worst mistake, you can eventually get out on it. Don't make a big one. Just make it small.
I like that. Yeah, that's it. If you wait long enough, typically it'll all shake out. One of the things that we see going back to financing, though, is that people don't have the proper debt structure on these properties. So how are you structuring your rental property debt wise, as far as, term, rate, things like that, so you don't get caught holding the bag?
Well, even on that property that I was just giving the example of, I was underwater for several years.
Sure.
on that property. But the goal there was never to sell. It was always a long-term rental. But today, that was '08. It was a different lending time, a different housing time. It was a different time altogether. Now you're required to have equity in your property. 15% minimum at some places, 20, 25% depending. So even if there is some type of a correction, you're going to be in a much better position than when you were back then, when you borrowed 100% or 110% of the value.
Right.
So today, it's important to keep those lending rules applied to your own investments, right? If you keep equity in the property, you should be good even through the thin times.
What about rate and term, sort of discussion on that?
Yeah. So I have a regular job, right? I'm a lender.
Right.
My regular job allows me to get Fannie Freddie money, which means I get all those great publicized rates you see on the internet. They're all 30-year fixed rate loans. Remember, this is business debt. So I spread it out over time value of money. The longer I hold it, the more inflation hits, meaning the less the debt is important. So
Right.
if I'm borrowing below inflation, it's almost like it's free. So yeah, I'm spreading it out. 30 years, but fixed rate. And you can find this in the commercial portfolio side too, if you network good. So you can find these types of loans just about everywhere on the residential loan side. When you get to like, hey, I'm doing warehouses and self storage units, those are 20-year adjustable type of things. But on the residential side, 30-year fixed all the way.
All the way. That's fantastic. Andrew, thank you so much for your time today. I do appreciate it. I've learned so much from you, even though this show typically focuses, of course, in the commercial space. There's a lot of things that I think translate over that you've talked about, both from just, staying the course in a single asset class and not getting distracted, finding creative ways to get your deals financed, how to take down deals just by yourself and not bring on partners and avoid some risk. I know I kind of asked this question already earlier, but it's one of my last questions, and I still want to give you another crack at the question. If you were to help our listeners avoid just one mistake in real estate, what would it be, and how would you avoid it?
The way you avoid mistakes is you learn from other people who are smarter than you. So get out there and network in your market right now. If you're listening to this, there is a real estate network that's meeting. You might not have even known it. Get connected with them. Share your information. If you've only done 1 or 2 deals, you might be the expert for somebody else. Get out there and meet and network with others.
Got it. Love that. Question number 2 for you is when it comes to giving, actually, we're going to scrap that all together and edit that part out because I'm not even asking the right question. Here we go. One more time. The next question for you is when it comes to investing in the world, what is one thing you're doing right now to make the world a better place?
Well, and when you were buying distressed properties, right? Sometimes we're getting people who are in a very challenged place and saving them in a way. Like, hey, if the bank forecloses on you, you're out. You don't get anything. So your responsibility, if this is what you're really doing, you have an obligation to give back to your community at the same time. So whether you give back to your religious organizations or your university, you've got to give back. So I'm a veteran. I do tons of veteran events around town, but my wife and I, we have 3 F's that we focus on: friends, family, and Furbies. So if our friends come to us like, hey, I'm doing this charity thing. Yes, friend, here's some money. If the charity organization is family focused, we give bunches of money to those. And if they help care for your furry friends, we like those types of charities too.
That is awesome. Andrew, thank you so much for your time today. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Sure. You can just give me a ring. I have a phone number. My phone number is 817-380-1913. I'm also on Facebook, Andrew Postell, Bigger Pockets, Andrew Postell. I'm on Instagram too. Contact me any way you like.
Andrew, thank you again.
Thanks so much.
Hey, thanks for listening to the How to Scale Commercial Real Estate podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.